Hey, welcome to the 40 Finance channel, everybody. Today we're talking about the ARK Innovation Fund, ARKK. And right now that seems to be like two schools of thought in this one. There are the strong supporters of Cathie Wood and her investment strategy, and they're looking over a longer term horizon. But here in 2022, we've also had an uprising for SARK, which is the shorted version or the short mindset for ARKK. So for this video, we're going to take a look at the holdings of ARKK, try to think about them from the mindset of, is this a good time to buy in since the price has come down considerably, or is the ETF SARK the better strategy here, and basically placing a bet that the ARK stocks will continue to go down, the market will continue to see weakness. That's what we're going to examine here today. All right, so here's a look at ARKK today, trading at just over $71 here right before lunchtime on February 28th. And the year-to-date chart, you're down 28%. And that's not really surprising. I'll assume everybody's familiar in the types of investments that ARKK digs into. We'll see the full list here in a second. But you're basically looking at, technical innovation. You're looking at companies that are basically in the infancy of their value proposition for how they're going to change the world and how they're going to make money. And anything similar to that mindset has been absolutely tanked in the stock market this year, particularly those that do not have any earnings per share. Now, if we scroll back to a one-year view, the damage is even a little worse at minus 47%. So 1 year ago today, the price for ARK was at $136.70. So if that was the first share that you purchased and you never averaged down, you'd be down about 47%. Now, I personally do hold some ARKK shares. They are in my SEP IRA over at Fidelity. And I just peeked this morning to see where my cost basis was, and it was running in the neighborhood of about $90. And it's kind of interesting to look at it that ARK, and there was another ETF, FDN, which is sort of an e-commerce internet company composite. Those were my only two investments that were down in that particular account. Okay, so thinking about the current opportunity today with ARK, I think it's probably the most beneficial to think about the components of ARK to help you make a determination, is this a buy opportunity or is this a short opportunity? So what I've done here in Seeking Alpha is I've taken the top 50% weighting for ARKK. These are the individual stocks, and this helps us look at all of them from a high level in more detail and try to get a feel for their fundamental metrics and how their momentum is going. And as far as building that sort of top 50% portfolio, you can get it right from the ARK website. I think this is pretty common knowledge nowadays. But right down here, you got your top 10 holdings as of February 28th. So everything that's in here is represented on that portfolio I put in. And just doing some napkin math and eyeballing the weight percentage, these top 10 holdings equate to between 50 and 55% of the fund's total holdings. Okay, so let's go down the list here. Tesla, Square, Roku, Coinbase, Unity Software, Teladoc, Zoom, Twilio, Exact Sciences, and Intel Therapeutics. And right off the bat, though, one of the things that I think is most obvious is over here on this 52-week range, almost all of these stocks are trading much closer to their lows than their highs from a 52-week standpoint. That certainly can be a red flag from the momentum side, but quite honestly, there's a lot of stocks in the stock market that are trading close to their 52-week lows. Now let's take a look at the Seeking Alpha ratings for each of these stocks. And by the way, if you're interested in learning more about Seeking Alpha and Seeking Alpha Premium, which is what I'm using here today, my affiliate link's in the description. It gives you a significant discount on a 1-year subscription to Seeking Alpha Premium. If you're familiar with this channel, you know I use this platform all the time, and I can't say enough about it. So check that out in the description if you're interested. Now for these stock ratings, Seeking Alpha basically gives a 1 through 5 score in every category. 5, of course, is the best. 1 is the worst. But there's different types of scores, right? Or excuse me, there's different types of categories. So Seeking Alpha authors score is the people who write on the website. And those people could be regular investors like me or you. Some of them actually have like a financial advisor firm. Then you've got Wall Street analysts, which are the ones you would typically see on CNBC. Seeking Alpha also has their own quant score. And that quant score is broken out into some of these grades here, which is valuation, growth, profitability, and momentum. We're going to dig into the valuation a little bit later, so let's skip all of this and talk about sort of the opinions, right? You have the quant score opinion of a stock, and then you have where writers and analysts are rating the stock currently. And interesting to see, on the Wall Street analysis side, you've got greens across the board, which is mostly bullish sentiment. The quant score is a little bit lower, though. So when we talk about buying ARK versus buying SARK, just from a Wall Street opinion, we're kind of split down the middle, right? I would say the quant or the algorithmic approach to it all would probably vote for buying SARK. All right, now let's look at things from a growth perspective, and we'll just take revenue forward just as a conversation topic. Go down the list. Zoom's projected revenue this year up 96%. Again, that is a projection. And their 3-year, which is even harder to project, to be honest with you, but it's plus triple digits. Coinbase, as far as this year goes, expected to go plus 91% on revenue. They don't have a 3-year outlook, which, makes a lot of sense because it's going to be tied to the cryptocurrency markets anyway. Tesla plus 50% revenue this year, 3-year outlook plus 35. Teladoc 43 and 69, Twilio 41 and 63, Roku 39.54, Unity 36 and 42, Square 34 and 75, Exact Sciences plus 16% this year, plus 57% over a 3-year span, and then the Intella minus 12% this year, with an outlook of only single digits over the next 3 years. Now, that's the top line. That's the revenue top line. What gets interesting, as always with ARK, is that EPS is not a concern of theirs, and it is obviously represented in the fact that if you just did a simple EPS forward, you have some companies growing, Zoom, Tesla, Square, Twilio, but then when you hit Coinbase and below, the rest of the companies in the top 50% of their portfolio are either projected to be, let's just call it flat on EPS for Coinbase, and then the others are just not in the realm of profitability. All right, so even though it's a revenue sort of price to sales story, let's try to do our best here with valuation metrics. Let's start with price to sales. This is high to low. In fact, I'm going to flip it because lower is better. So Square comes in under 4, which is, relatively decent. I wouldn't say that's horrendously overpriced. Coinbase under 5. I think that's probably fair for as much as they're growing. Teladoc slightly over 5. Roku over 6. Exact Sciences 7.5. Zoom 9.4. Zoom actually will have the strongest EPS performance over the next couple years, at least projected, and their technology. So getting a technology stock under 10 in the price to sales department really isn't as bad as it sounds. Then we've got Twilio at 10.25, Tesla at 15, Unity Software at 26, and Intella at 206. Now, if we flip the script and put price sales on top, I'm just going to say Intella looks incredibly risky at 200 times. Unity certainly has more room that it could fall if they don't have some big announcements this year. Then you got Tesla under 15, and I would say Tesla probably has 4 or 5 or 6 points that they could go down in their valuation case as well. Okay, so what we have here is the chart for SARK, which is the short version of ARK. And this is a fund, FYI, that has not been around forever. In fact, it debuted sometime in November of 2021. Now, as luck would have it, it came out at a pretty good time because we started to see a ton of market volatility in and around Thanksgiving. That has obviously bled well through here into February, and growth stocks and those without much to their fundamental story have obviously been hit the most. So if you got in SARK right when it premiered, you would have bought in at approximately $30.74. And assuming you held it long, your peak would have been February 23rd at 53.61 or so, something like that. And now, at the end of last week, we saw the market bounce back with a couple plus 3% days, at least on the NASDAQ. And so SARK has started to go back down again. Okay, so in my opinion, we are at a very interesting fork in the road for the ARK versus SARK argument. And I think that this is where people are either going to be right or wrong, is the bottom line. I can tell you for me personally, as someone who owns some ARK shares, and yes, I am underwater, I also have very little interest in cashing out of ARK right now. I think that there is still some opportunity for this fund, particularly over the long term. And at least the way I see it right now, the news and the headlines across the board, literally internationally, they can't get much worse, right? I suppose they could, but we are getting pounded with bad news, and that, of course, is the worst time to sell. So I will be sticking with my ARK. I added a couple 1 and 2 shares here and there throughout January just to lower the cost basis since I had the opportunity. I'm not a huge buyer here, but I certainly will let it run and give it time. Now, on the SARK side, the question is, are you willing to bet on the demise of ARK? Right? And basically, since you had the upward trend at the end of last week, the question becomes, does ARK go lower from here? Because if you're going to buy in at $45 or whatever that chart we just saw was, the peak was in that $53, $55 range. So you're either comfortable with SARK getting back to $55, which means ARK has to fall back to its most recent lows, or even further still, you think that ARK is not even close to the bottom yet, and it will continue to fall even further beyond the recent lows that we've seen. Now, for my money, I just don't short anything, and I think that it's a play against momentum, and it would have to be a pretty huge case for me to be interested in shorting just about any stock out there. I would rather play stocks with upside and with potential for the future than trying to root for the demise of a stock. And furthermore, I would say that SARK is particularly risky, and the reason for that is because unlike shorting, say, the QQQ, which is a market cap based ETF, ARK is a managed ETF. And they have no bias to their holdings, and they have no promises that a certain stock will or will not be in there. So now you're making a broad short bet on an active investor who can change their holdings at any time. Now, of course, they're supposed to stay within a theme of disruptive innovation, but technically, if we said, say, Google and Facebook are two of the more undervalued stocks in today's market. If everybody agreed on that, there's nothing stopping Cathie Wood from buying Google and Facebook and putting it in the fund and, punishing the shorts that way. So it's just something to think about. That's probably not going to happen. But keep in mind, when you're shorting ARK, you are shorting an active investor on the other side. So where your bet is constant, they have variables to manipulate the price. All right, guys, hope you enjoyed this exercise thinking about ARK versus SARK. What is the better buy right now? Be interested to see your comments below to see what you think. Don't forget to check out that special offer for Seeking Alpha below through my affiliate link. Potentially support my channel. Thank you very much. And as always, please give the video a like, share with your friends, all the things. We'll see you on the next one.